This is the performance summary for the weekly reversion strategy for the week ending August 1st. Let's start by inputting the balances. So the starting balance was on July 25th. And the ending balance was on August 1st. So it was not a great week. My portfolio was down $633, which is a percentage loss of 2.09%. So these were the 5 positions held over the week. The first one is Booking, and that one was down 4.48% over the course of the week. And this is what the trade looked like. So Weekly Reversion buys dips, and here's the dip that it was looking at, and got in here Monday and sold here Friday. Booking had a earnings midweek, which didn't help. And the overall stock market was down over the week. This is the SPY ETF. And towards the end of the week, there was a employment number release, and that wasn't a good one. Turned out that there was a downward revision in the employment number over the past quarters. And the employment situation in the US right now is looking kind of bad, and that really sold things off. I have a graph here from the Fred website. This one is the non-farm payroll history going back to 1940. And I just quickly looked at it, and it's kind of interesting. Because right now, if you look at the non-farm payroll number, after the COVID, there was a huge spike upwards and seems to be flattening out right now. And these flattening out periods always seem to be a precursor to a recession. For example, the last time this happened was just before the subprime crisis in 2008. You can see that this statistic was starting to flatten out and roll over, and it went into a full-blown recession. And the one before that was in the dot-com period. It was very strong through the late 90s, but then it started to flatten out and roll over around 2001 or so, early 2001. Now this rolling over period can take several quarters. It's not a super fast thing, and I think we are entering into one of those phases. But anyway, just thought that was kind of interesting. Next one is COF, Capital One Financial. That one was down 2.6, and so picked up on this dip, and the thing went down over the week. Third one was IBM. That one was down 3.9%. It had a really horrific earnings reaction the week prior. So it bought here on Monday and sold here on Friday. Netflix was down 1.9. Here's the dip, and here's the trade. And the last one was PM Philip Morris. That one was actually up over the week, made 2.1%. So it bought this dip after an earnings announcement, and bought here, and we sold here for a profit. Okay, let's put the ending balance into the cumulative tab. And this is how the equity curve looks since inception in June 2024. And let's also look at the performance over the long term. This is the back test going back to 1994. And annualized return for the strategy is 19.8%, whereas the S&P is 8.6%. And month to date, August, the strategy so far is down 1.5%, putting it at plus 13.2% year to date. And here's the equity curve. Purple line is weekly reversion. So that's the performance summary for the week ending August 1st. If you want to learn more about weekly reversion or want to subscribe to my weekly signal service, please go to my website. Link is in the description box below. Thank you.